The real impact your circumstances can have when it comes to selecting the right mortgage for you. Now, of course, it's really important to remember to speak to a mortgage broker to run through your individual circumstances with them to determine the best mortgage option available to you. Now, to begin demonstrating how complex it can be to select the right mortgage, I'm just going to show you my sourcing system for an 85% loan to value purchase. £300,000 purchase price, loan amount of £255,000, so 85% loan to value, term of 30 years. I'm going to just demonstrate how many products are available for that one search. So here is my sourcing system. So as mentioned, purchase price £300,000, loan amount £255,000, so loan to value 85%, term 30 years. And here are the lenders. There's numerous available. So HSBC, NatWest, Virgin we can see, Santander, Leeds, Barclays, and it keeps on going. 57 pages of lender products available. It's actually 846 products available just for this one search. So 85% loan to value on a 5-year fixed deal. This is not looking at a 2-year fixed deal, 3-year fixed deal. This is not looking at buy to let products. This isn't looking at interest only products. This is just repayment mortgages at 85% loan to value on a 5-year fixed deal. 846 products available just on that one search. But that search was just 5-year fixed deal products at 85% loan to value for a purchase. But what about actual circumstances for someone looking to buy? So okay, we've got self-employed 1 year's accounts here, which we've looked at before. Really, when it comes to lenders available to you, for high street lenders, there's only really Halifax. Kensington are a good one to consider, but their rates are typically a lot higher. When it comes to lenders who won't accept you, well, the list grows considerably. Cord, Bank of Ireland, Barclays, Coventry, Leeds, Nationwide, NatWest. Multiple lenders won't consider you. So if your circumstances are you've been self-employed for only 1 year, then your options are obviously limited. So we look then at self-employed if you've got 1 year's accounts, and you can see options were limited. But what about if you've got adverse credit, for example? What options do you have then when it comes to getting a mortgage? So I'm looking at defaults registered in the last 3 years or missed late payments. So Bluestone, for example, they're good with adverse credit. They'll accept maximum 4 registered defaults in the last 3 years, none though in the last 6 months. That's often the case with specialist lenders. They're not happy if you've got things within the last 6 months. Before applying for a mortgage, make sure you get an up-to-date credit report together, get it sent across to your mortgage broker for them to review to know exactly what mortgage options are available. Kensington, another good one for adverse credit history. Vida, so we've got Aldermore here. You notice there's green and yellow. So green is yes, accepted. Yellow is yes, we can do. To be honest with you, when it comes to adverse credit, it all needs to be checked by the lender. So even if there's green, it's really important that we know the size of the defaults, when they were registered, if they were satisfied or not, things like that. Before you apply for a mortgage, please get an up-to-date credit report together. Get it across to your mortgage broker for them to check. So then they're able to look at lender criteria. You can see how many lenders, you can see each lender has their own individual criteria when it comes to adverse credit. So the mortgage broker is going to check your credit history to know exactly what lenders are available to you and what the best product is going to be for you. Remember, we're just looking at 2 parts of adverse credit here. There's a whole raft of different options when it comes to adverse credit, and we can see all the different lenders, all their different criteria, but we're not looking at bankruptcy accepted, IVAs, default satisfied or unsatisfied, missed payments on mortgages. Adverse credit covers so many different types of criteria. So you can see if you've got adverse credit, it really depends on what type of credit history you've got, and that will determine what products and lenders are available to you. It's really not straightforward finding the best mortgage option available for you. So we've looked at self-employed 1 year's accounts. Now we've looked at a little bit of adverse credit history. So immediately we're seeing that it's not always straightforward to find the best mortgage option available. So what other circumstances could dictate what mortgage options are available to you? Let's have a look. Another good one to look at is benefits. So I've got child benefit here and universal credit. Often comes up. A lot of parents will assume child benefit will be accepted. Now there are a number of lenders that will accept, as you can see here on the left, a lot of green. But here immediately comes a yellow. Some will accept it, might depend on how old the child is. So if the child is in their late teens, might not be accepted because obviously it won't have a long time to run. And then you'll have lenders that won't accept it. Aldermore, Bluestone, Precise, a lot of specialist lenders not too keen on benefit income. Digital, Metro, Virgin, and Universal Credit. So Santander we're good with. Halifax potentially. Skipton here, one of the best lenders when it comes to using benefit income. One of the more generous when it comes to lending as well. Will accept multiple different types of benefit income as well. Something else to consider though is if you are heavily reliant on benefit income, some lenders will only accept it if you have employed income as well. So if you're applying as a couple, normally that's okay because one of you may be working whilst the other has benefit income. But if you're applying as a single applicant and your income is solely from benefits, then your broker needs to be checking with lenders to see who will accept pure benefit income if there is no employment income as well. There could be other things to consider as well. So if you have credit commitments, then for example, NatWest can be more generous when it comes to borrowing than say Halifax are. Halifax not always the best at lending when credit commitments are involved. Often depends on the level of income, of course. And of course there are other circumstances to be aware of. So when it comes to getting the best mortgage for you, it's always worth talking to a mortgage broker because it's not just straightforward. It's not always a case of needing the cheapest available product at 80%, 85%, 90%, whatever it may be. You might be self-employed, you might have adverse credit history, you might have benefit income, you might need a lender to complete a lot quicker than another one because obviously some lenders are quicker at completing than others. So there's a whole raft of things to consider. If you're unsure about your circumstances and what lenders will be available and what products will be open to you, and you're happy to do so, comment below and I'm more than happy to walk through it with you and let you know what options may be available.